Hello, the BDO webinar about annual allowance. This webinar should take about 20 minutes and I will discuss the annual allowance and the scheme pays elections which you can make. The allowance. The annual allowance is the amount that you can contribute into a pension scheme and receive tax relief on those contributions. The annual allowance is shown on the slide, and so you can see in 2013-14 the amount that an individual could put into a pension scheme was 50,000, which reduced to 40,000 from 2014-15. In 2016, the tax rules changed, and rather than everybody being automatically entitled to a 40,000 annual allowance, your allowance may be abated depending upon the level of your income. There's also, which is 2015-16, whereby you have effectively your NHS share split into two. So there's a period up to 8th of July and a period up to the end of the tax year, and you have a 40,000 allowance for each period. So this is important when you're looking at your unused relief to carry forward. And so all you should look at when you're looking at those figures is the amount of growth in the second period, and compare that to the 40,000 allowance that you have. So well, the annual allowance, and you can put £40,000 into a pension scheme. For your NHS pension scheme, your pension on retirement is based on your pensionable earnings, not based on the actual amounts that you physically paid over in terms of contributions. So when we look at the 40,000 allowance, we look how your NHS pension benefits have grown from the start of the NHS year and compare those with the value at the end of the NHS year. The in benefits over the NHS year is what we call the pension input for your purposes. An individual who the contribution, for example, to a private pension scheme, they put £10,000 into that pension scheme, and their pension will be based on how that £10,000 performs up until their age of retirement. Take your pensionable earnings for each year, and those go into the pot, which then we look at when we look at the final pension that you're entitled to. Should be aware there was the 2015 scheme that came into effect from April 2015, and some of you will be members of the 1995 scheme and the 2015 scheme, or members of the 2008 scheme plus the 2015 scheme. If you've got protected pension, then you will be in the 95 scheme or just in the 2008 scheme, and you'll know that by looking at your date of birth and seeing whether or not you should have moved into the new scheme. What's important when you're looking at the annual allowance is you should receive a statement from NHS Pensions for each scheme that you're in, and you need to add the growth from, for example, if you're in 95 in the 2015 scheme, you need to add together the growth in each scheme and compare that total to the 40,000 allowance, or compare that to your abated allowance, depending upon whether you have an abated allowance because of your level of income. So just so you can see whether or not you have moved into the 2015 scheme, or when you might move into the 2015 scheme. If your date of birth is before 1st of September 1965, you use some form of tapered protection. If you were born after 1965, 1st of September, then you'll have automatically moved to the 2015 scheme on 1st of April 2015, and so the tapered protection is irrelevant for you, and so you will be looking at your 95 or 2008 growth plus 2015 scheme. If your date of birth was before 1st of September 65, so on the slide, if we look at the very bottom line, if your birth date was 31st of May 1963, then you'll see that you will have moved, we should be moving into the 2015 scheme on 1st of December 2019. So if you look at, you can look for this online, so if you Google tapered protection, NHS pension scheme, you'll get a time off where you can look at your date of birth and see the date that you transition into the 2015 scheme. On the next, we look at how you can obtain the gross figures. So it's really important that you ensure you get this data. NHS Pensions are supposed to send you a statement if you exceed allowance. Now there's a couple of points to consider here. You won't know whether or not you have an abated allowance, so how will they know that you've exceeded the allowance? And also, we've seen many clients whereby they've exceeded the allowance but they've never had a statement from NHS Pensions without requesting it. So good practice is to telephone NHS Pensions, the numbers on the slide, ask for the growth in your NHS pension scheme for annual allowance purposes, and automatically give you the growth for both schemes. It's very hard to get 2017-18 growth. This is expected after August this year, but you can always ask. What I would recommend is that you obtain your figures from 2016-17 and earlier years. Once you've obtained these once, that's it, left that on your record then, and we can always just track what unused relief you have carry forward each year, and then it's easy enough to see when you've some excess growth and what a tax charge might be, or we've got enough growth, used growth in previous years to offset to make a tax charge nil in a tax year. If you did move into the 2015 scheme in April 2015, when you're asking NHS Pensions for your figures, the 2015 scheme will only be relevant from 2015-16 onwards. So if you're asking for 12-13 and 13-14 growth figures, it'll be nil for 2015 scheme. And you may or may not have an abated allowance. So that's a test. To see whether an abated allowance is to find what your threshold income is. Your threshold income is all of your income, so partnership income, employment, dividends, interest, perhaps from rental properties, all income that you earn or receive. From income, we deduct the pension contributions that you've made, and there are other deductions such as loan interest relief, but you should check each deduction to check that it qualifies for the calculation of threshold income when you work this number out. If this number is less than 110,000, then you're automatically entitled to an allowance of 40,000. If the number exceeds 110,000, we then need to do a second test. The second look at calculation of your adjusted income. And your adjusted income is the threshold income that we've just worked out, plus the pension input. So this pension input is the growth in your pension scheme. If when we add together, they come to more than 150,000, this is when your allowance gets abated. The abatement's £1 for every £2 over 150,000 you are. So an example, if you have threshold income of 120,000 and input of 40,000, that would give you adjusted income of 160,000. So in this example, you're 10,000 over the 150. So we take the 10,000, divide that by 2, which is 5,000, which means your allowance is abated by 5,000, giving you an individual annual allowance of 35,000 for the tax year. Just looking at examples, we've got partnership income, bank interest and dividend income, and property income, self-employment income, and employment income. And we've got two columns, one where the total income is 137,000, some superannuation contributions of 25,000, and then this is where we look at what this number is for threshold income. So in this first example on the left, we've got a threshold income of 112,700. On the right, we compare that to 81,950 as threshold income. So the column on the right, you can see because that number is less than 110,000, that individual automatically gets the full 40,000 allowance. But for that, we need to add on the growth in the pension scheme to see whether or not there's an abated allowance. For this example, we've got 112,700, growth in the scheme of 75,000. So those two numbers together to arrive at adjusted income of 187,500. 50, and we've got an abated allowance of 21,150. Work ensures that where you come in personal expenses, so you could be in the scenario where your threshold income is £110,050, and so potentially you could have an abated allowance of £50 over the threshold income. There may or may not be anything you can do about that, but it is just making sure that we do have clients, for example, where bank interest might be estimated, or you might not be claiming all of your expenses, so it just makes it quite important where you might be really close to that 110,000, so that's worth having a look at. So on the next, the carry forward will work. You forward unused relief for 3 years. We're looking at 2017-18, then we can go right back to 2014-15 and see if we've got any unused relief that we can offset against future tax charges. So if we run through each example, so if we start with 2014-15, we can get these numbers from NHS Pensions or ask for a statement to be sent to you. So growth in the fund in 14-15 of 28,000, an allowance of 40,000, and so there's £12,000 of unused relief a year, and so you can carry that forward for 3 years. Be sure that if you've made any private pension contributions in addition to the NHS pension scheme, you need to take these into account as well. 2000 growth of 11,000, annual allowance of 40,000. We've got 29,000 of unused relief. Those 2 years added together give us cumulative growth to carry forward that we've not used of 41,000. We know in 2017 that inflation increased, and so estimating growth in the fund of 60,000. Here we've got an abated allowance, so rather than the full 40,000 allowance, we've got a 30,000 allowance. Carry forward. So here we've got excess growth. We can use 30,000 of the 41,000, and so we have no tax charge in 16-17. And still got 11,000 of unused relief to carry forward for 17-18. If we then look at 17-18, growth of 80,000, again we've got an abated allowance. That means we've got 50,000 of excess growth. We close the 11,000 unused relief that we've still got, which means we've got 39,000 of excess growth, which is subject to tax. The slide shows another example with just higher growth in the 2016-17 and 17-18 tax years. And so tax charges in both years when we look at this other side, just because the growth is so much higher. On the slide, you'll have noticed when I was included an estimate of the growth each year that I use different amounts, so your pensionable profit may have stayed fairly consistent over the last 5 years. But when you get your growth figures, you'll see that they fluctuate quite significantly each year, and that's because your pension benefits grow by inflation, so they grow by the Consumer Price Index. And depending on the level of CPI, will have an impact upon your pension benefits and then have an impact upon the growth. So if we look at 2015-16, you can see inflation was at 0.1%. There was an increase in 2016-17 where inflation rose to 1.1%. Percent of an increase doesn't sound very much. You can see that it's the highest increase you've had in the last few years, and also the increase to 1718, there's an increase of 2%. So I've just put an example there that you look at your pension statement, you'll see that 2015-16, your pension input amount is low in comparison to other years. You've got 2 high years of pension input for 16-17, 17-18, because these increased over the year. In 2018-19, it dropped to 2.4%, so I would expect your pension input to be lower in 2018-19. That's a little bit of a reason why your numbers might fluctuate when you do look at your statements. So who is excess growth for 2017-18? I think a large proportion of our clients will be exposed to excess growth in 17-18. Certainly the clients that had excess growth in 16-17, unless they become deferred members, will have excess growth for 17-18. And also for GP has moved from salaried to a partner, there's an increase in the growth in the year that transition happens. If low profit, then might not be subject to a tax charge, or if you've part-time GPs with less than average pensionable profits, individuals may escape excess profit or excess growth. There's a few questions that I get asked regularly in terms of when a client gets their growth figures. So what's my tax liability? Why have I got a tax charge? HMRC charge interest, but why am I only being told about this now? Should I come out of the scheme? And can we estimate the growth? The main, as I've mentioned in the slide, is there's a charge in 2016, 17 and 17, 18 more commonly because of the increase in inflation. You may charge because you're in the last 5 to 10 years leading up to retirement. Your growth is higher in those last few years before retirement. You may, in the scenario where you have an abated allowance, the minimum allowance that you will be entitled to is 10,000. But obviously that's quite a difference from having a 40,000 allowance in previous years. And I had clients where they've joined as a partner and PCSE haven't collected monthly contributions for the superannuation, and so taxable income is higher, which creates an abated allowance, which is artificial because had PCSE have sorted contributions with the practice earlier, then relief would have been given. So it's really important that your practice manager's on top of making sure that when new partners join, that contributions commence as soon as possible. So the other question I get asked a lot is HMRC charging interest when you didn't know that you had a tax liability to pay. Now the reason HMRC charge interest is because we look at 2017-18. You had excess pension growth and a tax liability arose. That tax is due 31st of January 2019, so it should have been paid a few months ago. But probably you don't know what the growth is, and so nothing's reported on your tax return. But you can report on your tax return if you want to. You just put an estimated figure on, pay that. But most clients wait until they've got the figures, then report the figure on the tax return, and then HMRC will calculate interest from the date that tax due up until the date that it's paid. So unfortunately, the only way that you can mitigate the interest charges is to pay an upfront amount of tax and then adjust this once you get your final return. But clearly it's quite difficult when you don't have the information. And on the next slide, there's a lot of queries about why there's such a delay in getting the information. So for some reason, a lot of certificates that were previously submitted to PCSE don't seem to have been transferred information from PCSE to NHS Pensions, and so in lots of cases, copy certificates have had to be sent by the practice managers or by us or accountants. It's through to PCSE to then resend on the information to NHS Pensions, and then NHS Pensions say there's a 12-week turnaround to then get the information. So I appreciate it's all a bit frustrating. So what I would do is I would recommend that you start ringing NHS Pensions for your 17-18 figures at the end of August. And hopefully if there are any issues, then you can try on to it quickly so that you can get some numbers earlier than waiting until perhaps the end of the year to see if your figures are ready. In any case, if you do have a tax charge, then you'll still need to amend your 17-18 tax return because you still need to report the tax charge. Due to charges in 16-17 expected tax charges in 17-18, I've had lots of clients asking about whether they should come out of the pension scheme. So BDO can't give advice on whether or not you should come out of the pension scheme. You need to speak to an independent financial advisor with regard to that question. But there are other things to think about. So looking at your total reward statement and seeing what pension you're already entitled to and which do you need in retirement. So do you like to go on extravagant holidays? Mortgage be paid off? What kind of lifestyle will you have in retirement? And how does that compare to the money that you might need to live on? Any future significant inheritances that you might receive, and that cash flow impact of coming out of the pension scheme, because you lose the tax relief on the contributions that you make. So when you look in the accounts and see the cost of your superannuation, don't forget you are getting tax relief on that. So if you're making contributions of 30,000, if you come out of the scheme, you won't get 30,000. It'll be 30,000 less the tax relief that you would have had. But if you're doing, what else could you do with the money if it's not going into the NHS pension scheme? Clients say they're not going into the pension scheme because of life expectancy based on family history. There's lots of things to think about other than just the tax impact. But obviously where you've got high growth in your pension benefits, which is creating the tax charge, don't forget that also your pension benefits. So when you do have a tax charge, it's also worth looking at how that's impacted upon your pension benefits. So there is a positive side to come from it as well. We have been asked in the past if we can calculate the growth for the following year, but we can't calculate this for you. There's too many factors to take into consideration, and it's looking at the whole history of your earnings and how they've grown over the year and applying the CPI factors. So we have met with an IFA recently who will calculate the estimated growth for you in the current year and the previous year. So if you want me to pass on details of that contact, then I'm happy to do that. They provide a report that shows you what the cost of the scheme pays is as an estimate, and so you can then have an idea of what the growth is and what the tax charge might be. And I'm aware that there's a note on BMA's website to say that they're working towards a tool for calculating the growth. The date when this is available, and obviously that will depend on what's being input into the website to produce a figure as well. So 5 slides on scheme pays. So where you have a tax charge because you've got excess growth, you can make a tax payment personally, or you elect for the scheme to pay the tax charge. I can't advise you, and BDO can't advise you as to whether or not you should use the scheme pays because it has an impact on your pension benefits. There is documents online, so if you were to Google estimating the cost of scheme pays, you can have a look at, if you have a tax charge, what the cost might be in terms of benefits decrease when you come to take your pension benefits retirement. When you use like NHS Pensions making a loan to you, charge interest on that loan and then taken from your pension scheme when you come to retirement. I've previously used the scheme pays elections. There is a range for 2,000 2017-18, whereby the scheme will pay all of the tax. So 2017-18, if you had an abated allowance, there was an element of tax that you had to pay personally. And also, if your tax charge was less than 2,000, you couldn't use the scheme pays election, but all of those restrictions have now been lifted. The date for making a scheme pays election is 31st of July 2019. It's important to note the elections won't be accepted after this date. As I mentioned, I don't think you will receive your gross figures until August 2019 or later, and therefore, if you do want the scheme to pay a tax charge, if you think you may have a tax charge, you do need to complete the scheme pays election before 31st of July and just lose an estimated amount on the form. Once figures, you send a revised form into NHS Pensions, and you also revise your tax return to report tax charge. Just confirms that you need to report the tax charge on your return, and we'll charge for amending that tax return and reporting the tax charge, because we need to make sure that it's being processed with HMRC, the right amount of relief has been taken into account, and the charge is reported correctly, and we've made the pay election on the return if that's applicable. Once your tax, you also need to amend the scheme pays election. Submit that form to NHS Pensions. If you make an election and there is no tax charge, then you need to notify NHS Pensions that there is no tax charge. Equally, if the amount that you estimate is too much or too little, then that's fine. The form's just amended and the refund is claimed from HMRC, or the scheme pay the additional tax liability. But if you're using scheme pays, you don't see those transactions. And then finally, the scheme pays election, there's only 4 years they can have where you need to amend that election. So, for example, if you made an election for 2014-15 until July this year to update that election, this is where you've made estimated scheme pay election and you've not yet had your final figures. It's important to make sure you do have final figures before these deadlines. So that's the website. You've probably got lots of questions when we ran this in the office, so there's a lot of questions. So if you do have any questions regarding any of the slides that I've discussed here, then please drop me an email or give me a call. So my email address is juliette, juliette.smith@bdo.co.uk. Thanks so much.